Hello guys, welcome back to our YouTube channel. Remember, on this channel I always bring my trade setup on my trade pairs. So I'll be giving you a breakdown of a trade I missed yesterday. Though if I was around or if I was on the chart, I could have taken the trade. So I'll be giving you a breakdown on how to utilize your demand and supply areas in taking trades. Now, how to get a more refined entry, especially if you like using low stop loss and then you like going for a higher risk reward. So this video is majorly focused on just this concept. So first of all, you need to check your overall time frame, of which on XAUUSD you see that market has been on a strong bullish trend, and we have our first 1 hour order block, or you can call it a 1 hour demand area, which formed on 11th of June 2025. So on Wednesday 11th of June. So from there you can see that there was an inducement level around that area, but market gets to be consolidating and then approaching towards that demand area, of which we can see that markets kept tapping into the entry. Instead, markets give us another 1 hour order block inside of the zone between the previous 1 hour order block and then where market has been consolidating. So market give us another clear 1 hour demand or order block, anyone you can use. So but in this video I'll be using demand, right? So it won't confuse things. So it gives us a 1 hour demand block which occurred on Friday 20th of June around 1 p.m. GMT +1 or UTC +1. So from there you can see that market tapped into the order block or the demand block. Market tapped into the demand block on Monday 23rd 6 a.m. So market tapped into the order block, and you can see that there was a close inducement around that area which market tapped in and then give us a more refined entry, right? If you check your 1 minute time frame, but before the 1 minute time frame, you can see that also on the 1 hour time frame you can see a refined order block. Reason why you can get a refined order block is, if you notice, the moment market tapped into that area, you can see that market invalidated the previous supply area. So after the invalidation of the previous supply area, you check for the most closest demand around that supply area that was invalidated. So here was it, which formed on 23rd of June 8 a.m. So if you notice that market formed this demand area around here, and then after this push, you can see the market also gave us a small, like something that looks like an inducement, but not clearly like the inducement we used to know. So market gave us that inducement and then tapped into that area for it to buy the second time. Then if you also notice, using this 1 hour order block around the 1 hour block that formed on 20th of June, right? If you notice, market from there give us a kind of a 1 minute time frame invalidation of a supply area very close to that demand, and then give us a very good tap in into the most immediate order block. But the problem there was no inducement again. So it means that you taking the entry means that you'll be taking an entry that is more or less very risky. And market give us something that looks up to 1:, this should be 1:15, 1:20 risk reward, comparing it to the next high that markets have to tap. So you can notice that this was a very cool trade, and the SL here was less than 20 pips. That is another interesting thing about that trade. And this trade played out yesterday. Yeah, it played out yesterday around 1 p.m. between 12:1, and then by 4 p.m. the trade has already hit TP. And this was a very good trade as at yesterday, but I wasn't around. I wasn't available on the chart to take this trade. So that was it for yesterday. Then coming today, markets invalidated that previous demand. So remember that if markets invalidate the supply, you find a demand very close to it, and then markets should probably tap into it, especially if market is in an uptrend. What if markets invalidates the previous demand? What should we do? We find the most immediate supply area around that area. But in a case whereby market was previously in an uptrend and the market invalidated it, so we normally find what we call a breaker block, or within that area look for the candle that's like a very strong candle, a time frame that has a very strong candle that invalidated that demand area, right? The very strong candle, if you check on this particular chart, you see that there was a 1 hour candle that pushed through the demand area, thereby invalidating the demand area. So from that 1 hour time frame candle, you can see that it happened at the market open today, being Tuesday 24 June. So what I normally do is you mark out the high of that candle. Just mark out the high of that candle. It's either market does two things. Now market gets to 80% of that 1 hour candle or that time frame, just the candlestick that form within that time frame that has the strongest candle around that demand area that invalidated it. The market should make a pullback. Expect market to either sweep the tip, like the wick of that previous candle, the market should go at least 80% towards that level. So what I normally do is I go down to a lower time frame and look for market to create something like, okay, let me just show you this pattern. So I'll be looking at market to create this pattern. So going down to my 15 minutes time frame, you can see that from there, market gave us a kind of a more closer break of structure around that area, and then a pullback that went to sweep the high of that previous swing high that caused a break of structure around that area. Whereby if market should sweep it, expect market to also sweep that high or get close to that high, giving us a kind of a double top. So any of the two. But in this particular time, we see that market swept the liquidity at that week and then give us a candlestick pattern that looks like an evening star. If personally, I like using my indicator, which is my moving average, exponential moving average 8. So if you put the exponential moving average, you can see that market from that candlestick pattern that I formed around there, candlestick closed below the moving average. So personally, I execute from there. If I want to use a conservative SL, whereby a tight SL, then it should be just little above that candle that crossed the EMA. But if I want to use a more, like what they call it, a more like, I want to give my SL a breathing space, right? I will push it up to this side, the high of that second candlestick, because this kind of candlestick that looks like an evening star now, it normally happens in form of a strong bullish, a red, and then the next red, which must close below that strong bullish, right? If I see this three candlestick formation, this is just from experience. I don't know, but I haven't seen a name to give this candlestick, perfect name to give this candlestick pattern. So anytime I see something of this nature, I normally wait for Fib to close, and that candlestick, the third candlestick must close below the first one, right? Once that happens, execute the first trade from there. And if you execute the first trade from here, you can see that going up to a 15 minutes time frame to see how price is reacting from a 15 minutes time frame. You can also see that market from that first entry, market ended up making it a kind of a weak rejection, something that looks like a doji candlestick, right? And a doji candle is normally an indecision candle, whereby how to trade a doji is you wait for the next candle that forms. If the next candle closes bullish or opens or closes bearish, you take it as that. Like if it closes bearish, take a short. If it closes bullish, take a buy. Just as simple as that. So, and if you notice on this one, we have a strong 15 minutes candlestick that closed below the moving average, confirming that that trend, that direction we are taking our trading is more likely going to play out fine. So you can take your next trade at the close of that 15 minutes candle while you move all your SL to the high of the 15 minutes candle. It can happen on any time frame. Just focus on what should matter. Don't try to complicate things. So if you notice, taking your trade from there, you can now target the previous initial 1 hour demand, that 1 hour demand that we first marked out long ago, right? Then you can target that area, looking at market tap into the area. And remember that market can't just tap in and leave. Market sometimes does it that way, but most of the time market taps in and give us a more refined entry, giving us like an indication whether it will buy from there or it will keep selling from there. So targeting that demand area, you can target either 50% inside the demand area or just at the 100% of the demand area, which means once market comes into the demand area, it should close the trade for you. So anyway you want to take the trade, it's all good and fine. And this trade gave us a cool 1 is to 6 reward from the first entry, and also a cool 1 is to 6 reward on the second entry. And that's how you can utilize demand and supply areas. So break down again. Once market comes into your demand area, make sure that the demand area has an inducement very close to it, and it should be in alignment with the trend, like the immediate market structure, right? That's the first one. Then the second one is, if you're not sure whether the demand will play out, then allow the market to tap into the demand on a higher time frame, and then invalidate the most immediate supply area on the lower time frame around that demand. Remember, first tap into the demand area on the higher time frame if you're looking for a buy, right? Then go on the lower time frame and look for the most immediate supply area around that area. Then allow market to invalidate, like market should break it, making it invalid. Then look for the most immediate demand around that area. Then market should tap in and buy from there. It will also give you a conservative entry. That's number one. Then number two, if market should come back to that demand and then invalidate the demand, right? Wait for market to pull back into that demand area again. Then mark out the tip of that candlestick. Any time frame that has a stronger candlestick around that demand area that invalidated it, mark the tip of it. Expect market to come either 80% or to sweep the high. Market doesn't normally go far above it. So if you must execute anywhere around that candlestick, make sure your SL is like very, very much above the wick of that candlestick that formed it, right? Then from there, you expect market to tap into the next liquidity area, which can be another block or a wick or something. So just know where to target and make sure you close your profits as soon as you see it, right? Don't try to overhold or to expect unrealistic profits. So that is it for today. I hope you learned something from this video and this video has been helpful to you. So if you really enjoyed this video, make sure to hit the subscribe button so that you won't miss notifications from this channel. Until next time, I'm Jovianking Trades and I wish you profitability. Stay active. Bye for now.